And nerds, welcome to my channel. This channel is built for the fundamentals of trading. We want to make this as easy and digestible for everyone to understand how to get your foot in the door and how to start learning to understand these markets through charts. This app that I'm using is called Trading View, and it's a very popular app amongst different levels of traders. It allows us to look at different markets. Pretty much any market you can think of, you can look and add it to your watch list, which then creates a chart for you, right? So as you guys just saw, I added this NAS 100. And as I toggle through the bottom, I can go ahead and pull up that chart. However, I don't trade NAS. So I'm going to go ahead and click on it. I can either click on it or swipe if I'm using an iPad, but I can go ahead and remove that chart. Today, I'm going to be demonstrating the market through this chart here, which is the Australian dollar versus the Canadian dollar. And the simple reason for that is simply because I don't have this chart. I don't have this chart marked up as I do other charts. So because it's a clear chart, it's going to allow me to show you guys how to do things from the very beginning. Now, this might look confusing to some of you guys. You might be thinking, how am I ever going to understand how to read this chart? But it's a lot easier than you guys realize. It's just about breaking it down and being patient with yourself. The first thing that you need to understand when looking at any chart is the pattern, right? In this specific case, we're looking at a Japanese candlestick pattern. There's many different kinds. You'll see a lot of different charts throughout your life, whether you're a trader or not a trader. You'll see a lot of different types of candlesticks. But for me, these Japanese candlesticks are the easiest and best way to interpret the market. And we'll go over in detail what these candles do and what they represent. Now, I'm on my iPad, and on the bottom left-hand corner, we can see that I'm able to toggle through all the different charts that I have added to my watch list. Right now, NAS is still showing because I just deleted it. So it's going to take a little bit for TradingView to catch on to that, but that's okay. It's not a big deal at all. I'm going to be returning to the chart that we're using. And the next thing I have to do is make sure that my time frame is set correctly. Now, what does this mean? Well, what it means is I can set my chart to let me know how I want to break down the view of movement. Let me explain. So what you guys are looking at these Japanese candlesticks is different candlesticks that represent different blocks of time. So, for example, this candlestick right here represents 1 hour. This candlestick right here also represents 1 hour, 1 hour, 1 hour, and so forth. The reason for that is because I have my chart set to a 1 hour time frame. As mentioned, you can set it to different time frames, and you'll see mine are a bit limited. There's not a lot of different options, but that's because I set it up that way. That was done on purpose. And I believe that for me, 1 hour and 4 hour are some of the most reliable and best ways to analyze the market, which is why I use it so much. So, because I have my time frame set to 1 hour, again, each candlestick will represent 1 hour. So, if we hover over, it actually tells us specifically at 2300 hours, right, which would be 11 p.m. depending on your time zone, on October 29, 2025, the price action was in this range. Now, same goes for that one. It went down from 0.9172 to 0.91655. So each time frame shows us where that price zone was during that time, right? It's not gonna it's not gonna be one single price zone because it did uh, range between this to this. Now, if we were to set it to 5 minutes, you might see those candlesticks become much smaller because that time frame didn't range as much, right? In only 5 minutes, the market only moved from here to there. But in 1 hour, you'll see the candlesticks get a bit longer because there was a lot more movement that happened within that hour. And same for day. If we switch it to day, now those candlesticks might become a lot bigger because it represents an entire 24 hours of the market. So going back to our hour time frame, we'll see that each candle has a few different components. The components are the body, the wicks, and the entirety of the candle, right? Which is from here to there. That's a full candle. Now, each candle has an open and a close. In this specific candle, we can see it came down here, closed here. The next candle opened here, closed there. So how did we get these little wicks? Well, the reason for it is because although the market opened here, it did end up coming down, but then ended up coming all the way down up here and then closing right there. And then when the next time frame opened, it opened there, came here, and so forth. So why are some of these red and why are some of these green? The reason being is because we have two different types of candlesticks. We have bullish candlesticks, which means that the price action went up, making them green. We have bearish candlesticks, which means that the price action went down, making them red.